Welcome to Silicon Valley Asian Business Talk.
So Dr. Kanwal Rekhi, and welcome, and thank you for coming to talk to us. We really appreciate you spending time with us.
Yeah, thank you for inviting me, and it's my pleasure.
So Dr. Rekhi, why don't you kind of briefly introduce yourself to our audience?
Okay. So I'm Kanwal Rekhi. I've been here in the Valley since 1971, hardcore engineer by training, IIT Bombay, and became an entrepreneur in 1982. At the dawn of the PC revolution, networking revolution, we pioneered the computer networking. Our company was a pioneer in the computer networking, and so we drew with the networking. We were the sort of the foundational technologies for the internet, and went public in 1987. First Indian American rotate company public in 87, and our company was eventually acquired by Novell. So I was at Novell for about 5 years, 6 years, and so retired in 1995 early on, and became active in the startup ecosystem, mentoring entrepreneurs, help start TiE, and encourage Indian Americans to become entrepreneurs rather than job seekers. And I've been doing that now for 25, 27 years.
Discussion topic: when do startups have opportunities and how to treat competition?
The first question is about competition, in meaning how should new venture companies deal with strategy competition, more specifically balancing or dealing with the two kind of issues, because in one of your interviews you talk about it was a fatal flaw for many entrepreneurs to ignore competition. And so with that, what's your view or advice between monitoring competitors' moves and respond versus following customer, discovering their needs? Which one should venture company primarily focus on?
So let me give you the wider perspective. See, entrepreneurs thrive in a rapidly changing environment. If environment is very stable and static, the companies, established players in the marketplace have the advantage of resources, presence, brand, financing. But when the environment is rapidly changing, then the big companies have a disadvantage because they have inertia, they have customers, they have to worry about here and now while the trade is moving.
Sure.
And so entrepreneurs should normally thrive in a rapidly changing, emerging new markets. So in that marketplace, if you are coming in, if it's a dynamic marketplace, it should sustain several startups. Because you really don't know what will work. You have a broad idea what the market would need. So just to give you my example, computers will need networking. When in '82, when we were doing a startup, we were going to be a networking startup. But when having said that, what machines you're going to network first, what protocols you're going to use, what technology you're going to use. So there are several companies which come with the different combinations of things. But eventually, an entrepreneur who puts together a team, a good team, gets a financing lined up, and starts to understand a different set of customers needs more specifically, will not only survive, but he's likely to be a winner. So it always comes back to, you cannot ignore your competition. If your competition, and by the way, it's not a win-lose situation in most cases. There are multiple winners. It's like having a big playing field. You're playing here, and this marketplace, like I mentioned, has multiple requirements. when you start to grow, you start to step on each other's toes.
Yeah, that's
Yeah.
true.
And so issue is that you need to start defining what is your differentiation, what is that you bring to the party, and yeah, of course, yeah, that needs to be validated. The customer wants that, value that differentiation or not, and you should also know what your competition's differentiation, what are they touting. So yeah, eventually, yeah, you may step on each other's toe, but as a startup, you stay very sharply focused on your set of customers that you're going after, with your set of technology that you're going after, and if you are smart enough and done your homework, you will find a measure of success to survive. And but you cannot be poo-pooing your customer. His set of differentiation might be the one that customer eventually really wants. And so you have to keep an eye on your customers' needs and your competition's offering also. And it's much later that you have to start preparing for a head-on fight. So I tell people that get out there, start engaging with the customer, start satisfying his needs, listen to what the customer is saying and wants, rather than what you think he needs and wants. Because most of us have no idea where the real pain points are. Let the customer tell you. But you need to get out there early and engage with the customer. And so people who spend time perfecting the solutions, they discover that solution they have perfected may not be the one customer wants.
Yeah, that's true.
Get out there with half-baked solution. You don't have to charge money in the beginning for first one or two customers. Customer playing with your technology, playing with your offering itself is a very big deal. He's spending time and energy, investing time and energy in your product, and he'll help you perfect.
Right. Okay, that's why I also say half-baked product is
because
fine.
You don't know if the fully baked product that you think a customer needs is the one that customer needs. You bake it with the help of customer.
But how, seems to me, based upon your comments, it is extremely important for customers for companies to really understand customers' pain points or discover their pain points. But how does that kind of
so what happens?
The competition thing?
Like I mentioned earlier, a rapidly changing environment. If you're a customer, your vendors are not giving you what you need. Your needs are evolving, and those vendors are they have a list of requests from multiple customers, and they are trying to satisfy them. When the networking started to happen, if you were all IBM mainframes, IBM offered you a networking for that. Then the Unix machines came. IBM didn't connect those Unix machines to your mainframes. Then the PCs came. IBM didn't connect those PCs to your. So now you have a mainframe, you have Unix machine, you have PC. You're looking for some relief, and that's very opening for entrepreneurs, because IBM's hands are full. IBM cannot satisfy a given customer's need. They look at the broad set of customers and they try to say, hey, 10 people are asking for this thing. So you walk into that customer and say, hey, I can connect that Unix machine to your mainframe. I can connect that PC. And that's what we did.
I see. I see.
So you offer something that customer needs now, that his main vendor is not willing, is not able to offer him now. And by the way, startups are not the ones that they should go and say, throw out the IBM, adopt me, because it's a risky thing for a customer to do. You walk in and tell the customer, I know IBM will provide you what you need down the road, but you have pain now, and I have a solution now for you.
But that's very smart.
You become tactical. Don't bet your future on my survival, but you have this pain right now. I have this aspirin for you right now, and let's start.
So in a sense, actually, you don't treat your competitor as a true enemy. You sometimes
You don't treat your customers, I mean, your competition as enemy at all, because sometimes you have a solution to connect your Unix machine to the network, and your competition may have a technology that connects the PC to the same network. Maybe both of you are required to complete solutions. So the word that we used to use was you cooperate, you compete.
cooperate, yes, yes. And compete and cooperate.
Cooperate. Yeah. When you start to treat people like enemies, you'll miss out a lot. And so by and large, you stay focused on customers' need, respect his perspective, and then keep an eye on hey, where can I compete with? Where should I compete with my enemy here, or where should I cooperate with him? And we all have ambitions to be big company eventually, but that's eventually. Here and now, from my own experience, world is too big, too complex for a startup to be doing everything that customer needs. So he needs other partners in the marketplace.
That's very insightful, because you kind of also suggest startups also see competitors sometimes creating opportunities for you.
Absolutely,
right?
Absolutely.
So that's a very, very insightful perspective.
Yeah. The startups are fragile, don't have enough resources to do it all, and so they need to pick their battles. They need to pick their opportunities, and focus on them. Not worry about what the other guy is doing. If I solve problem for 10 customers, I can make enough money to pay my employees and develop some more stuff. So you stay very focused on here, now. The venture money gives you some runway, but you can't depend on it for very long, right? Eventually, you have to depend on customer money, customer cash, when you sell. And so stay very tactical. Stay very tactical in your execution, even though you have a strategy in the back of your mind.
This is very insightful. For a lot of people, they basically kind of force company to choose between following customer versus following competition. But you say no. You can easily do. You should do both, right?
You have to do both. You get back to survival issues. What do I need to be doing to make my revenue this month, to pay my bills this month?
That's very true. Yeah.
Discussion topic: improving existing products versus developing new products. How to balance?
At innovation in the sense of offering new features or better features, the way we frame it is, after a startup company find its first product services, got a stable customer base, and very well, we call the product market fit. So what's your advice to startup new venture companies in terms of keeping innovating with a true philosophy?
So here's a fundamental problem that entrepreneur faces. I have found a customer that my product fits now, but none of the environment is stable for very long. Machines are changing, networks are changing, configurations are changing. So what worked for customer today may not work for him tomorrow.
Yes, I agree.
So I have to keep up with that part to make sure that I am evolving my solution to stay fit within the changing environment, while I think about what other new features I need to be doing to add to expand my reach. So there's a trade-off between staying out there. This is the problem that large companies have. They have to take care of the customer's problem now, and that's the reason the startups have the opening, because their vendors are not able to supply, take care of all their needs. So once you start to become a player in the marketplace, you start to have that problem also. So I have 50 customers. and all of a sudden there's a new release of units, and my stuff doesn't work anymore. I have to fix that driver, fix that stuff, because customer's business now will come to halt. And so that's keeping my product current, and alive. That's not adding the new feature, new application, new stuff. You have to expand the, and so there is always this issue of trade-off between what I call the product engineering. You keep the product fresh in the marketplace versus the new innovations. You have to add new features, new stuff, and a smart entrepreneur has to balance. You cannot be doing all the product stuff only because your competition will steal a march on you on the innovations, but you cannot be doing all the innovations only because your customers are going to be very unhappy. So there is a fine line you have to watch. So you listen to customers. If only one customer is asking for that something, versus 10 people are asking for that, so there's a market feedback to you. So you start to say, is this one-off specific request for a specific need of a customer, or this is a market requirement? The multiple people are asking for. So a good entrepreneur is a very good listener. The number one job of the entrepreneur is to make sure that he's talking to the customers and listening, and afterwards managing the expectations, right? You don't want to be surprised, by a customer's request. You should anticipate.
Anticipate, kind of their potential needs or
pain points. You should anticipate. There's a new release of units coming. I want to make sure that my stuff works. So you should anticipate. This is the beauty of the whole environment. Environment is never stable for very long. No one person, unlike before when IBM supplied you everything. IBM supplied you machine, hardware, software, printer, disk drives, networking, everything. IBM to pace and make sure everything, what's in large step. Now stuff is being supplied by hundreds of different vendors, and their release cycles are somewhat asynchronous. And you need to just make sure that you don't get surprised.
It's very interesting. It seems to me, in your thoughts, one of the key kind of a common theme is the environment keeps changing, the customers keep changing, and
needs keep changing.
Yeah, it seems to me this is a very, very big point guiding venture companies' many actions. As we talk about. Innovation, developing new feature, always follow that.
So what happens? You have to also keep track of the product life cycle. At some place you have to give up. This is the end of the line for this product. I cannot be spending time and energy here. I need to make sure that I cover my plants with the new stuff. The new stuff is coming down. Future is there. So this is the point I made earlier, that you have to have a constant discussion with your customers. And they should know your plan, your development plan, and what they can expect you to support and what they can expect you not to support. So much better to have a very open relationship with customers. I won't be able to service that need. I just want to let you know 3 months ahead of time, so you have an alternate solution. So the entrepreneurs who surprise customers are the ones who almost always lose out. Customers should never surprise you, and you should never surprise a customer.
Discussion topic: choosing and serving customers even beyond startups' capabilities.
Like your early points, many times those kind of new product, new feature decisions are facing risk. That's why I kind of phrase it like a very disruptive or very radical versus incremental. But you gave a very, very good point. Talk to the customer to see if only one or many customers have that
Yeah, yeah.
potential.
Is a one-off need, or is it a market requirement? A market requirement means, hey, whole market needs it. I can't afford to ignore the market. I can afford to ignore a customer, because that's how the life works, right? I can make them all happy. If you try to make them all happy, you're likely to fail.
Yeah.
Then you also start to define who are my flagship customers,
Flagship customer.
who are the flagship, who are the lighthouse accounts. The lighthouse accounts are the accounts in the industry. They are the ones, they set the tone for everybody else. Citibank in the old days used to be the lighthouse account. If Citibank was doing something, all the other banks will follow. The Aetna insurance used to be lighthouse account. Yeah, so if Aetna is doing it, the others will follow. So almost every industry has lighthouse accounts.
That's a very interesting concept.
Yeah, because they set the tone for everybody else in that industry. All these industries have similar needs, right? And so what happens is, a lighthouse account starts to use a technology, it becomes safer for a smaller followers to use that also.
Yeah, that's true.
And so you can't afford to displease light-out customers, right? And now also step back and the word I use, flagship. For you as a company, the customer who's 20% of your revenue cannot be ignored.
That's a flagship customer.
Customer who's only 2% of your revenue. So you have, see, these are the decisions an entrepreneur has to make on a daily basis.
I can see the very interesting nuance balancing these many different issues.
And a good entrepreneur has to play this game in a very adept fashion. And everybody knows that nobody can do it all. So the word I use, philosophy, you want to do substantial good for substantial number of customers, substantial amount of time. You can't please them all the time.
Substantial, not all the time.
So where is my I need to make sure that I handle substantial number of customers. With substantial time. So it's a matter of making sure that that you have what you need to survive and move forward, and you have to let go things. You unhappy that they are. That's the value judgment, the trade-offs are something a startup has to do all the time.
Yeah. So it's just a relating.
Yeah, but just one. Sometimes you find a junior partner, a new startup, and start to point him towards the things that you are not doing for the customer. The customer would need. Hey, here's the opportunity for you. And then so you're trapped in a startup to put their resources to plug in the holes in your solution. So that's another approach. The most successful entrepreneurs start to use. I need to have other people's, and this is the point I made earlier. These are my now partners in the marketplace, even though they have ambition to replace me. But short term, customer has that issue. I am not going to be able to do it. If he does it, everybody's better off.
Okay, so in other words, in this again, you're involving potential competitor as a partner.
Yeah.
Okay.
Yeah, he has ambition to replace me.
Oh yeah, of course you know that.
Yeah. But meanwhile, I will, and he also needs a business now to survive.
At least a win-win for now.
Yeah, win-win for now, and we'll talk more later. Yeah. See, you never want to worry about what may happen tomorrow. You have to worry about this month, this quarter. I need to make my numbers now.
Makes sense.
It's a fragile situation. The primary goal is to become self-reliant financially.
Yeah, that's the key. Yeah,
Yeah.
you mentioned
Yeah.
earlier.
And if other people can put their resources to further your cause,
Yeah, why not?
why not?
Right?
Yeah.
Thank you. These are fascinating points. Just one small follow-up question, then we'll move on to the next question. You're talking about a substantial group of customers that pay your bill, make you survive, keep your lights on, versus lighthouse customer. Is it possible that the demands of the lighthouse customer might be different from so-called the substantial group of customers because they are at different stages?
Yeah, happens all the time.
So how, as
Yeah.
a company,
Yeah.
startup, how do
This,
you balance?
so this is again, you have to use your judgment. Yeah. Your customers always have to come first.
Yeah.
The one who is giving you 20% of your business, you might go for a lighthouse account, which is giving you the market exposure, but the my customer is paying my bills.
I know.
And keeping my team employed. So there's a judgment call there. And what happens? You don't talk to people. You talk to people, and many times your customers are willing to help you out. How do I make this thing work? So what happens is you get to a place where there is a mutual dependence between you and the customer. The customer depends upon you, and you depend upon him, right? And then you start to do a joint planning. What is that you need, that I need to prepare, and what are my compulsions that you need to be aware of? So some joint play. This is a CEO's job, an entrepreneur's job, is to make sure he is on top of his customer's needs and requirements, and customer is fully aware of what you can offer him. If you are not able to offer him and you surprise the customer, you are going to lose a lot more than just an order, right? Almost everybody goes through this problem. The old-fashioned IBM. Where they control the whole situation. Those days are long gone. Companies like Microsoft are not able to handle. So most of the companies, when you get to a certain size, you start up having this group which is looking for partners to plug in the holes in your solution. Almost all these companies, Microsoft, Amazon, they all are looking for partners, to complete their solution.
So don't try to do everything by yourself.
You're not going to be able to do it.
Discussion topic: considering growth from the lenses of survival.
Or, you sit on so many boards of new venture companies, and many of these companies, probably primary objective is to grow because they already find the business or the product customer base, growth and scale up. So can you offer your wisdom on what are the typical challenges to scale or growth, and what are the solutions to scale up and grow their venture business?
So you have to grow at the same rate the market is growing, just to maintain your position. If you're 10% market share, market doubles in size, you have to double in size just to stay 10%, right?
Yeah, that's true.
Yeah, so you cannot be not growing at least at the rate market is growing.
Right, otherwise we are shrinking.
You're shrinking. You're becoming less and less relevant. So now the issue comes, growth versus profitability, right? I need to grow. Do I need to grow faster than the market does? Do I need to raise lots of money, anticipate market needs, and invest ahead of time? So those become now a different kind of challenge. And the rule there I personally follow is that, do I have a profitable business model?
Okay.
If I invest more in this other stuff, that's my development growth strategy. if I'm not betting money, I'm losing money anyway here. I'm going to take up more expenses, more losses. Yeah, yeah. Can I finance it? Can I finance it at a reasonably good valuations? So what I've seen lately, which I have not understood, how can a company keep growing when they don't have a profitable unit economics? Uber comes to mind. How can Uber be such a large company and still not make profit?
So like okay, growth at a loss.
Yeah. So the markets, financial markets, yeah, they are very erratic. Money is easily available, and money is not available at all overnight, right? So what happens is, if I have a positive unit economics, if I am profitable or I break even at at my current size, I can pull in my horns and survive.
Yeah, that's true.
Yeah. If I'm not breaking even or profitable with my current size, and I keep scaling up, I'm going to scale up my losses.
Yeah, that's true. Yeah.
And which is what happened to many of these companies, WeWork, Uber. Eventually, when the money becomes tight out there, you cannot be dependent upon the outside financing forever. Yeah. So I, as an entrepreneur CEO, you need to have this two hats. Am I going to survive if I don't do anything else? And do I have a future? You never have a future if you don't have your present. You always secure your present. So I'll tell you a story, which and I still use that. As a student, I went for a summer job to Chicago in 1968. I got off the bus, Greyhound bus. I had $10 in my pocket, and I walked over to the YMCA, and they said $4 a night. I said $10. I said $4 a night. I can survive 2 days. And I have to, I have enough to, $2 to eat. And so I can survive in Chicago for 2 days. I checked it into YMCA. I walked down the street, and there was a sign that help wanted.
Help wanted.
I went in there. It was a dishwashing job. And I said, I'm available. They said, can you work right now? Yes, sir. They sent me. I put the apron on. I worked. And it was $1.25 an hour. So I got $10 of cash. And I got free dinner. I came out. I had now $16 in my pocket, and my tummy was full. So I can survive 4 days in Chicago. So I counted how many days I could survive if I did not wait another dollar. And I still use that strategy, with the entrepreneurs. How many days can you survive if your orders dry up? Is that enough time to turn around and do something that you need to do? So the entrepreneurs who do not have this keen sense of how long they can survive. And one of the problems is that if you bring managers in, and this is what happened to me also. The managers from IBM or HP who they come in to become GMs and CEOs, they are very, very unaware of financials and financial dangers. Somebody in the treasury, somebody in the at the headquarters, gave you the money and the budget, and they tapped. You never had to worry about survival issues. As an entrepreneur, you are very aware of. I am very fragile. I need to be making decisions, which are lengthening my life rather than worrying about future.
Discussion topic: Financeable milestones, meaningful goals for startups.
When you grow, you got to consider the profitability, which relates to the survivability. Is this similar concept to the runway concept? Because they say how long is your runway before you can possibly take off?
Yeah, so that is at the heart of the startups, right? So we do. I'm an angel investor, seed level angel investor. So you talk to the entrepreneur. This is a new entrepreneur who has done any business. how much time do we have to get to a place where we are financeable by somebody else?
Financeable by somebody else.
Yeah.
Like a next investor.
Yeah. So what do I need? What milestones do I need to achieve to become financeable by somebody else? Do I need a product? Do I need a product market fit? Do I need customers? How many customers? Yeah. So you have to have what I call a good idea. If I achieve these goals, somebody, a regular VC will put more money into us.
That's a good point. Yes. Then it's a next.
Yeah. So you're not worried about long term. So the angel investing, seed level investing is all about, can we reach a financeable milestone?
Financeable milestone.
Yeah. So and in a more vernacular way, I'm going to put you into a desert. How much water and food do you need to survive alive on the other side of the desert? I cannot give you too much. I don't have, right? But I need to give you enough.
Could you maybe, this is a very, very good point. Could you elaborate a little bit about what are the financeable milestones to give people a feel about the indicators?
So when the entrepreneur comes to me, I'm an angel investor, I am a seed level investor, he has a dream. He has anticipated a market happening out there. And typically you say, this thing will happen 2 years out, 18 months out. And I want to be there to cash in on that one. I need to develop my product. I need to show, validate this product works for a given set of customers. So the goal is to have a very good handle on. There is no surety, right? Very good handle on. And if you are a smart entrepreneur, 1 or 2 identified customers, these customers have this problem, and I have talked to them, and if I have the solution that I'm promising them, they will buy.
Okay, that's the indicator.
Yeah, and so there is no guarantee anywhere.
Yeah.
But there is a very good understanding of the customer's pain point that's emerging based upon. All this happens because there is a change taking place. If there was no change taking place, things would be totally different. A change taking place for a variety of reasons. Technology is moving forward, chip technology is moving forward, software technology is moving forward. So entrepreneurs have to come to you with a not only dream but a solid thing, and then we sit down. All right, what do we need to be doing to satisfy those 2 customers that you identified their need? How soon can we engage with them? And so there's this plan that the entrepreneur and the investor agree on. If we achieve this, then we both believe the VCs will give us the money. Then I go to the VCs. Hey, I have customers. I have a technology. Sort of works. We need to perfect the technology and find 10 more customers. I need money. So I can hire a few more engineers and a few more salespeople, right? And then you go to the next set of people. Hey, see, this stuff starting to have. I need to have a sales office here and sales office here. And I need to do some advertising. So you're raising money for different purposes.
Correct. Yeah.
You're raising money to have a product market fit. And with 1 or 2 customers, you're raising money to make sure this is truly a broader market and then a couple of customers. Then how do I scale up? That's the A, B, C money, right? But you cannot scale the raw idea, which is what happened in many of these cases here. They scale up the raw idea before they have totally validated the technology. And every step of the way, there has to be a good sense of economics. Is this a profitable thing to do, right? And that's another way of thinking. The pricing becomes a very much part of how do you price what you're offering.
That's
Discussion topic: Unique advantages of Asian immigrants.
So maybe we kind of switch a little bit kind of a gear to the Asian culture background because, you know, I represent the Asian Innovation Business Center. So the first question in that particular category is, do you think your Asian cultural background make you kind of a different in approaching running new venture business, you know, compared with the non-Asian culture entrepreneurs?
So I came to US when I was very young. You know, I did my master's here. I worked for about 10 plus years, you know, before I tried my hand at entrepreneurship. I come from a non-business family in India. You know, my dad was in the army. So it wasn't that I brought any business cultural sense, but if I was to replace the word Asian with immigrant,
Good. Yeah.
the immigrants have solved this survival problem anyway.
Yeah.
You know, like I told you about Chicago, you know, I have no fallback position. I have no family. I cannot tell anybody to send me the money. Yeah. I have to make it happen, right? Yeah. So you do whatever you need to do to survive. So immigrants have that starting point, right? And it appears that the Asian, you know, and with that I mean Chinese and Indians in this case, have very competitive upbringing, large populations, you know, limited opportunities. So they're very competitive. They go for the opportunity. If I didn't do it, somebody else will take it.
Yeah.
You know, definitely true in India. Yeah. So we are very competitive for that reason alone, and that serves us very, very well in America. You know, we are focused on survival. We are focused on doing it before somebody else does. Taking it before somebody else takes it, and afterwards, you know, there are very low expectations of us. People don't think we can do it, or so they don't take us seriously. You know, and as a result, you know, the pressure is off. Yeah. And so when I was an entrepreneur, nobody thought, everybody laughed. Yeah, how can, he be an entrepreneur? You know, Indians are not entrepreneurs. Indians not managers. They don't know how to sell. They don't know how to market. So you're underestimated, and that allows you as a competition. They ignore you. So it gives you a little bit of extra breathing space, right?
Yeah.
So so I have found both Indians and Chinese have done really well because of those reasons. Whether we have a superior business knowledge or superior business methods, I am not sure.
Interesting. So it seems to me you're suggesting two very important points. One is the pressure for survival, kind of make people like you really work hard to find solutions.
Do whatever you need to do.
Yeah, do whatever.
Yeah.
The second one, it's interesting you say the expectation is very low, so that takes the pressure off and give you the space to explore and grow.
Yeah. Nobody thought I could do it.
That's a
Discussion topic: differences between good and bad entrepreneurs.
You are doing a lot of these kind of things. What's your, maybe start with what's your kind of a reflection of or the wisdom of entrepreneurship? Relating to that advice to the young.
How do you pick an entrepreneur? When you're doing the angel investing, how do you pick? It's a very risky business, as you know.
Risky business.
Yeah, most of the first-time entrepreneurs fail. 90% fail very quickly, right? So I have learned that I don't know who's going to succeed. It's a different combination of skills, leadership skills, the insights about business, customers. It's a different set of combinations. Multiple different set of combinations work. So you cannot have a recipe that if he has this and this, is it sure bet, because you'll miss most of the companies that way. But I have learned one thing, that I am very quickly able to tell who's not going to win.
Okay. So share with us, you know.
Yeah. So who's not going to win? So that, yeah, I'm able to reject people very quickly. Yeah, and then I end up with the richer midst of potential winners, right? And I have found that to be my ability to reject people has been pretty outstanding. Yeah, and yeah, so there are few things when I learned. One of the first one is intellectual honesty.
Intellectual honesty.
Yeah.
What does that mean?
Yeah, you're not fooling yourself. You're not drinking your own Kool-Aid. Yeah, you stay. Yeah, you stay humble. Yeah, you acknowledge all your failings and all your limitations. Drawing in, I'm going to win because I have these strengths, but I know I have these weaknesses. But most time you win because you outlast your competition, and that requires a very good self-assessment of where I want to end up. So let me give you one example. You have to own your failures.
Yeah, that's true.
Yeah, if you don't own your failures, you're going to have this problem. If entrepreneur tells me that his first company failed because his engineers, VP of engineering didn't get the product right, or his first company failed because the customer canceled the order on him, or his first company failed because the investors won't give him more money. So he failed because somebody else made him fail. I don't want to invest in him because next time he's going to blame me.
So in other words, when you hear people blaming others for their failure, that's a bad
Very bad.
sign.
Yeah, I want a person who says, I failed because I didn't see that my VP of engineering was falling behind and needed help. I failed because I wasn't listening to my customer and they were unhappy, or my investors were getting frustrated with me. So there's this ownership of your and
that's what you mean, ownership of failure.
Yeah. So you need to say, yeah, I screwed up. I need to be paying more attention. I need to be it was me who didn't give the resources, right? It was me who didn't know the investors were frustrated with us. So the guy who starts to learn very quickly.
Yeah. Because if they view issues that way, they tend to find a weakness, they find to learn, improve.
I wasn't listening, I wasn't paying attention, I was focused on wrong things, right? So there's a learning that place, and that alone is the biggest thing I look for. The other one is leadership issue. Leadership issue is that you acknowledge other people's contributions.
Acknowledge other people's contributions.
You are not the only one who made it work. Yeah, and you are not the only one who is going to make it work. You need to lead a team. You need everybody fully motivated, and you need to acknowledge that these guys are getting into the same fight with you. And they need the same level of rewards. You cannot be saying, I looked at Elon Musk right now coming to Twitter. You cannot be blaming, saying, I am going to make it happen. It's me alone. The guy say, I need all the help I can get. I bring this thing to the party, but I need what you bring to the party, I need what you bring to the party. So leadership skills are the other part, where you start to understand the guy fully is aware that others' contributions are as crucial as his own.
That's a very good point. So this is the second, like a leadership, basically rely on team collectively making it happen.
And providing the team the motivation. Your job is to make the team cohesive and motivated. I keep learning new things all the time. And there's a few simple things like Me Too parts don't work very well because you cannot be saying I'll be Uber of this and Uber of that. innovation has to be fresh, right? And so it's not the technology, it's not the market, it's the individual that makes it happen.
Discussion topic: Good mental states required by entrepreneurs.
These are very, very good advice as well for even for people who want to pursue that. You may already touch on a lot of these kind of issues. What's your advice? Do you have other advice for young people who are excited or interested in pursuing entrepreneurship? Beside these issues, insightfully.
So entrepreneurship is not something you just do casually. You have to prepare. You have to prepare yourself. You have to start understanding what you're getting into. It's a very tough journey. It gets a lot tougher before it gets better. 2, 3, 4 years, right? Sometimes even longer. And so not only mentally prepared but physically prepared. Can I survive with the substandard salary for 3 years, 4 years? Can I? The mentally is very tough.
Mentally is tough.
Very tough. Because nobody believes in you, and in the beginning no results have been shown, and there's nothing to show for the time you're spending. People start to think you're wasting your time. Even your family, your mom, your dad start to feel why you'll be better off having a stable job someplace, right? Especially that's one of the problems Asian cultures have. They value stability. Over unstable, risky setup. Why can't you be a normal kid like everybody else and go get a job? Why are you wasting your time and everybody's time? So there's no family support from that perspective. At least in my case there wasn't any. So you have to have this inner fortitude. You have to have some inner feedback. Why Then there's this point I made earlier about ever-changing environment.
Ever-changing environment,
What you saw yesterday as an opportunity may not be an opportunity today because what happened in the marketplace today.
That's true. Very true.
So there is this constant reaffirmation. Am I still doing the right thing? Am I still doing the smart thing? What is that I need to see? To tell me that I'm on the right track. So the self-doubts are very urgent. Very
self-doubts. Okay.
Because why do I think? I need to have an answer for that one. Why do I think I'm not made it? Why do I think I'm smarter than this guy? Why do I think I know market better than that? Why can I? This thing which happened today, this announcement by somebody else, how does that impact what I was doing, right? So you always have, but you don't want to have self-doubts which are paralyzing.
What does that mean, not paralyze you, but you still have doubts, or you still ask yourself a lot of questions?
You come back and say, yep, I know that's a risk I'm taking, and I chose to take that risk from the day one, it got maybe a little bit worse, but it didn't become fatal. When you start to say, this risk has become fatal, that I get paralyzed, why would I do it now? But that's a healthy thing to do also if you realize that and correct course. But you cannot be doing things that you don't believe in anymore.
Correct. That's correct.
So I always tell the entrepreneurs that you need to have affirmation of your idea, and you need to have confidence, but you need not become a fool when you have doubts to the point where you didn't believe in it anymore and still doing it.
So it's kind of a very interesting balance between believing or not believing your own dream.
Which is the point I made earlier. It's a tough journey, and there's nobody else out there who can tell you.
Nobody else can tell you.
because nobody has the right to tell you to put yourself through this hardship.
Yeah, yeah.
And nobody else is telling you will help make you sustain that hardship. You have to sustain that hardship, right?
Yeah, that's true. That's true. Yeah.
So it's a lonely journey. It's a very lonely journey.
You know, talking about basically again, you know, because you got such an extensive, successful entrepreneur career, have you encountered some kind of very tough decisions or tough moment, you know, in your entrepreneur career? If you, and also of course the lessons from those very hard lessons, from hard moment or hard decisions.
Oh yeah, yeah.
Can you share with us?
Yeah. So one thing I've learned that you don't want to do these things with your family and friends.
Or don't do it with friends.
Yeah, because you lose your objectivity. You become tolerant of their mistakes and faults. You start to rationalize their lack of performance. Yeah, this is a tough world. Yeah, everybody has to pull his weight. Yeah, there's no friends. Yeah, you don't want to get to the place where you're demotivating the good guy because you have a friend that you're favoring.
Yeah, that's a good point. Yeah.
So my startup was done with a friend, and he turned out to be a dud.
Wow.
He turned out to be a dud, and I felt trapped because I didn't like what he was doing, but he was family friend. Our children were playing together. Our wives knew each other, and so when the board finally decided that he was dud, he expected me to live with him. And we are friends. How can they fire me and you what? And that's when I said no. They fired you for lack of performance. I still believe in the opportunity. I'm going to make it work. So I stayed back, and I made it work. But it was very tough. We haven't talked to each other.
Wow.
In almost 35, 36 years.
Oh, that's sort of personally painful.
Yeah, well, not anymore. Yeah, he went on to fail several times. Yeah, and I went on to succeed several times. Right? Yeah. In the beginning, he kept saying, I stabbed in the back. Towards the end, you can't say that, right? Show me half a dozen success. It was very, but I've learned since then, when you start to do things with your family and friends, you're not very objective.
Yeah, that's very good advice. Yeah. So that's a big thing.
Yeah, and also, you should know what you don't know.
What do you mean by that? What do you know, what you don't know?
You shouldn't start to make decisions where you have no good basis to make decisions.
Oh.
You should bring in the people. You should trust their judgment. And back to the point I made earlier, leadership, trusting the other people is a team effort. Yeah. So I didn't know how to sell. Yeah, I was a very good product person. I was, turned out I was a very good marketing guy also. Yeah, but I had a very good sales guy as a part of my team. And I trusted his judgment, and he turned out to be very good. So you should know that I am not the best in this area. I need to have somebody who's much better than me here. And so it's a eventually you need to get your ego and your other stuff out of it. You need to step out of it, and I mentioned this earlier. Why do I believe this thing? Why do I think I'm the best? Why do I am I the best? Is it still the right thing to be doing? So you need to have this reaffirmation of the faith all the time.
All the time. Yeah.
You get to the place where you have enough of a confidence, and the other people have enough of confidence. But I have learned also every situation is new. Since I did the company, world has changed a lot. Younger people know technology a lot better than I will ever know now, right?
Yeah, I think that's fairly consistent with your advice mentioned earlier. Be humble and be aware that you cannot do everything. You need to rely on teams. Right?
Yeah. Humility is absolute requirement. When I talked about earlier, the traits that I look for to bet on leadership, intellectual honesty, humility is right there.
Yeah, these are all kind of related. Yeah.
Discussion topic: Why experienced entrepreneurs/investors miss future opportunities.
You have invested in so many, kind of new venture companies. So I'm curious, actually, have you had a so-called like a mistakes or unrecognized something because you misjudged some entrepreneur as some ventures? What are the lessons you can share with us from that perspective?
So I talked about entrepreneurs, but same is true for angel and VC investors. You have to have self-doubts. You don't know it all. You're not so smart as to have all the answers. And so in my case, there were new stuff is happening. I didn't understand. Social networks. People were talking to me about social networks in 2000, 2001, and I had no idea what they were saying. And I said, that's nonsense. So you need to have this starting point that I don't know it. The world has changed quite a bit since I was in the trenches, and young people know. Young people are on the front lines. If they start to tell you something, start to listen, validate, go back and do research. So I have become very focused on individual rather than the idea. If young people is very excited and is willing to give up his job and pursue that dream, you better not ignore it. And especially if you hear from 2 or 3 of them, right? And so the changes are so dramatic that if you're rooted, it's hard to take the flight of fancy to see. And so one of the things I've learned now, when I mentor people, I'm listening a lot more. I'm learning a lot more. Than I teach or tell. So one of the advantages is when you talk to a large number of young entrepreneurs, you start to get a very good perspective of what's happening, what's happening there. And you can do everything right and still may not work, right? Because there's a issue of competition, there's an issue of execution, there's the issue of luck. The opportunities didn't arrive in time. So you're going to fail more often than you're going to succeed in the best of scenarios. So don't become very hard on yourself. As a result, failures come with the territory as an investor.
Seems to me what you're talking about, the things you missed in your investment career or identify venture or technology is similar to your advice to entrepreneur, meaning they need to be open-minded, humble, aware of their weakness.
Open-minded, being humble is also trait required for the VCs and investors. A lot of people start to think that, they have money, they have made money, they are smart. They don't need to listen anymore. I mean, we can see Elon Musk right now, right? Right? In this ever-changing world, the only thing constant is people. You don't want to bet on an idea, or a technology, or a market. They can change overnight. You want to bet on a person, an athlete. So I define being an entrepreneur is driving at night on a mountain road, where the road has this hairpin bends, and you only can see what your headlights show.
Okay, so in other words, you need to be fully aware you can only see limited.
Limited, and I need to prepare to turn on dime when, when
like
the road turns.
Okay, you need to be prepared
Yeah,
and ready for that.
You don't want to go off the road when the road turns like that, right?
So that attitude or mindset is extremely important, like it be flexible,
flexible,
humble, nimble.
And anticipate change any minute.
Okay.
And so that says you can only draw so fast. You don't want to draw too slow because market will overtake you, but you don't want to draw so fast that you draw off the road.
Yeah, that's very good advice.
Discussion topic: a unique model to invest in first-time entrepreneurs.
It's a very interesting that relating to that, because I know one of your company, which is kind of a investor syndicated company, only focus on like a first-time founder.
Yeah.
So actually, I'm curious because that kind of is very relevant to many young students.
Yeah.
So what's your
so
kind of an indicator to select or invest?
So we became a little bit mathematical.
Become mathematical.
Mathematical in our approach. So you're playing the high risk game, so you need to have a large portfolio. So this Silicon Valley quad formula is, we will do 32 companies.
32 companies, for example.
Yeah, over 4 years. Yeah. And so we are going to screw up. They are super high risk. We don't miss more of them. And then we have 31 investors in our syndicate. So the capital is coming from 31 people going to 32 companies, and we are the sort of central point. So no one failure will sink us, and no one investor becoming unhappy will sink us. So we have to deal with everybody. That we are trying to build this portfolio of 32 risky companies. Hopefully, we are smart enough to get maybe 1 in 4 right. And the way we have done is that initial valuation will reflect the risk we are taking. I don't want to value the company to the point where I want to bet 40 times my money on my winners. If I value them very highly, very unlikely to make 40 times on my winners. So the goal is that I want to be able to have 1 in 4 winner, and I want to make 40 times on my winners, and so hopefully on the whole we'll make 10 times our money. And it's very mathematically structured, and if entrepreneur wants too much valuation, not interested.
Okay, so that is from more financial perspective.
No, right? But also now having 32 companies, we are going to go into 32 different situations.
Oh, that's interesting. Also diversify in terms of situation. What do you mean situations here?
So we are going to do some SaaS companies. We are going to do some consumer companies. We are going to do we don't want to pile up on a given market, a given technology.
Okay. So in other words, you diversify, reduce risk also by different industries or sectors.
Sectors and technologies, and so it's a. This came from my personal experience. We don't know what the real answer is. It's all numbers game. It's all statistics. Can I structure a situation where our brains are being used to pick the entrepreneurs and mentor the entrepreneurs and help him? But I'm not a magician. It's not a one. I cannot pick an entrepreneur and give him money and make it work. So this has the number 32 was picked for that reason, and there's a time diversification also. We are going to do 8 companies a year for 4 years.
Oh, I see. Oh, okay, yeah. So it's for 32, right?
Yeah.
So, but then,
and there are 4 of us who are in the Silicon Valley Quad, so who bring different perspectives.
Oh, also that's also kind of help you to see the bigger picture.
So it's all done mathematically Yeah, and nobody has done it this way before.
Yeah, I know, I understand, that makes a lot of sense. But let's say within each particular SaaS, for example, how do you pick this SaaS new venture versus the other one? What's the selection criteria for the
So we have one
entrepreneurs?
partner who's very much part of the SaaS industry. So we know where the overarching market is going in SaaS. And we know what it takes to build a SaaS company. So the four partners who are there all bring totally different backgrounds. So we are not going to have group things.
Yeah, that's very good, like complementary thoughts.
Yeah, and we all believe in this basic formula. We cannot give them the valuation which will not give us 40x. If it wins, we need to think of 40x.
That's very smart.
Yeah, and there is no shortage of deal flow. And since we are able to take this ultimate risk, we are coming into situations where competition is not that tough. Most angels give you $500,000 to $1 million. We are able to give you $2.5 to $3 million.
Oh, okay.
31 investors have given us enough pool. Yeah, so I'm able to give you enough cash for 18 to 24 months.
Oh, okay, 18. Okay.
Yeah, Mr. Entrepreneur, you have enough cash from me from 18 to 24 months to get to a financial.
Yeah, as you talked earlier, like a financeable.
Yeah, milestone.
Yeah.
You are not going to spend any time raising money from anybody else in that time frame. You spend all your time making this thing happen. A lot of entrepreneurs get $500,000, million, they get joined and they spend half their time raising money.
Next round, okay.
To stay in business. I'm going to take care of your financing needs for 18 to 24 months. And let's between you and me agree, what that needs to be done to get the VC money. Second part is, since we are able to give you $3 million, we are able to attract the best deals out there. And we are able to pick and choose. So there's nobody else doing what we're doing. So our competition is not the VCs, because they don't play this game, they don't play this super risky game. And our competition is these angel investors who are not able to give you more than $500,000 to $1 million.
I see, yeah. That's a big differentiation.
Big differentiation for the entrepreneurs. We solve your financing problems for 18 to 24 months. We free you up to execute.
Yeah. But earlier you said many times in your investment philosophy, you said you cannot predict the technology, the business, because it changes all the time.
That's the reason we have 32 of them.
Oh, that's right. Okay. But you said...
1 in 4, all I need is 1 in 4 to what?
But you focus on people. But in this particular investment, do you select people?
Absolutely. That is always overriding concern. Yeah, the bet is on a person that you think who's likely to be a winner. And then the secondary bet is on technology and market.
Oh.
So the four of us who are doing it are entrepreneurs who have done it, who are very successful record in building companies, who are very successful record in doing angel investments alone. So we are hoping that by pooling our ideas and thoughts together, the basic theory is that hopefully we'll get better deals. Hopefully we'll provide a good mentoring to the entrepreneurs, and we're giving them good financing, and hopefully with our name and reputation we'll help you get the VC financing a little better than you on your own. So it's all mathematical.
Yeah, now I can see the thoughtful calculation to diversify the risk, or to mitigate the risks.
Mitigate the risk on both sides.
Yeah.
Discussion topic: managers and entrepreneurs, the differences and the values of these two roles.
Many entrepreneurs actually, they kind of a transition from initially technology professional, then they want to be the funder, or from the technology area, then become the business person. What's your advice to these people who go through those typical transitions?
Very hard thing to happen.
So
Very-
what's the advice?
yeah,
What are the
yeah,
common mistakes
yeah.
you have seen during
Yeah.
these transitions?
Yeah, you cannot translate your success in one area as a potential success in every area.
Mm.
So entrepreneurs. So let me give you entrepreneurs versus managers.
Manager, okay.
Yeah.
Mhm.
Entrepreneurs are innovators.
Yeah.
They are risk takers.
Yeah, yeah.
They are builders. So when they start, they have nothing to lose. They have no inertia.
Right. Oh, nothing. That's what you mean. Nothing to lose.
Yeah.
Because they
have nothing.
Not large company. They do.
Yeah, they have nothing to lose, right? I don't have customers. I don't have a factory. I don't have employees. I don't have. So you build everything from ground up, right? And when it works, you start to have this problem. You start to build inertia.
Yeah.
You start to have customers, inventory. So you are innovator disruptor. It cannot be innovator disruptor where you disrupt your own stuff.
Almost like your success become your liability.
Yeah. So you have to start transitioning. Managers, on the other hand, are streamliners.
Streamliners.
Yeah. They improve the efficiency of
efficiency. Mm.
Yeah. If I'm making 10% margin, if I can improve the efficiency by 5%, I'm making 50% improvement in my business.
Mm.
They are incrementalist.
Incrementalist.
Yeah,
Mm.
and their primary job is to keep the resources employed efficiently and profitably.
Mm.
I need to make sure trains are running on time. I need to make sure customers are getting the products. I'm collecting the money. So you become a lot more process oriented, right?
That's a good point.
Yeah.
Yes.
So it's very hard for a fast moving, disruptive innovator to become a manager. It's almost an impossible transition.
And also, it's difficult for the manager to.
Yeah, manager to become a.
So it's almost like one is the, the improving something versus creating something.
So a marriage made in heaven is a manager and an entrepreneur respecting each other between partners.
Mm.
We saw that happen many times. Microsoft, Bill Gates and Mike Maples. We saw that happen at Apple.
Mm.
Steve Jobs and the other Steve, and then later Steve, later Tim
Cook,
Yeah. So where they each know their limitation and they respect others. One doesn't smother the other, right? So people ask me, who's better? Who's better, the entrepreneur or the managers? The answer is no. There's no question of being better. You need them both. Society as a whole needs them both.
Yeah.
The entrepreneurs add dynamism. Managers add stability in the environment.
Very, very philosophical. Yeah.
The entrepreneurs, make sure, that stuff is moving. There's a fervor, and managers make sure, we have the product, we are shipping, to thousands of customers. So there's this thing. A good entrepreneur is very aware that he's running out of, he's likely to disrupt his own business if he doesn't bring a stable manager as a partner. And so this transition is very, very hard to happen.
Oh, that's one of the barriers for many people to change from.
So the companies start to fail because entrepreneur starts to become the baronet or disruptor inside the company.
Discussion topic: how to develop future entrepreneurs.
How do you motivate a person to become an entrepreneur? I talked about why not me, right? The thing which I've learned since then, you have to spark
You have to spark.
Plant an idea in a person's head, and you have to challenge him, but you cannot push him to the point where you think you can turn him into entrepreneurship. Let this spark work its own magic. If the guy starts to destabilized, why not be? He has to come with the idea. So I never tell anybody that you should become an entrepreneur. I tell people it's not a shame that you became an entrepreneur and failed.
It's not shame.
Yeah, it's a shame that you didn't even try.
Okay.
Yeah, and I leave it at that.
Yeah. Also, it's very interesting. You differentiate between sparkling people versus pushing people.
You cannot push. It's a very hard, tough journey. You cannot tell people to inflict pain on themselves. They will blame you. It has to be from inside.
Yeah, you already mentioned that.
Yes. So I tell people, not everybody is going to be an entrepreneur, and not everybody needs to be an entrepreneur. We need the working bees.
Yeah, like a manager role.
But also, we need the people who come and work for 8 hours a day and go home. Without them, the companies won't work either. But you need to decide, whether you have within you what it takes to be an entrepreneur, and most likely not. And you have to decide, whether you want to put yourself through this hardship or not. I can't tell you that, right? So I'm giving enough material, right, for him to make a decision. But my point is that more than likely you don't have it. More than likely you're not going to make it. You prove it to me. You have it, and you.
It's interesting. A few days ago, I went to a Plug and Play. They have a lot of coaching programs, but they have a concept which is similar to what you're talking about. They look at whether this potential entrepreneur is a coachable or not. The interesting concept of the coachable or not.
Coachable is a very good. That's another trait. That's another trait I look for. Coachable is the guy who is curious enough to start getting interested. But he doesn't have all the answers. He's coming back to you. What about this and what about that, right? After 2 or 3 of those sessions, they start to become self-sustaining. But they are not ashamed to ask for ideas in the beginning, right? Like I said, the environments are always changing. If you are a mentor like me, you have seen hundreds and thousands of these situations. You start to see a pattern. The new guy hasn't had that experience, so they come and taught you. But like I said before, every situation is different. So we can tell them the patterns we have seen, but we cannot tell them what they have is same as what we have seen before.
Yeah, that's a very good point.
Yeah, because you don't want to be giving them the answers, right? They have to figure out the answers on their own, but you're giving them the tools. So I never tell any entrepreneur what he should be doing. This looked like what I saw before, but it's a different technology, a different set of people, different set of markets.
Thank you for watching.